What if I told you that global debt is not a mistake, not a crisis, not a temporary imbalance, but a system? A system designed so precisely, so silently, and so irresistibly that the total debt of the world can never go down, it only rise. Even when countries try to pay it back, it still grows. Even when economies slow down, it accelerates. Even when politicians promise discipline, spending, printing, and borrowing explode anyway. Why? What force keeps pushing debt higher, decade after decade, without slowing down? To understand this, we have to go back. Not 5 years, not 50 years, but to the very beginning of how money itself was redesigned, quietly, deliberately, and permanently, to setting the stage in the system they don't talk about. Every government in the world has debt. Every corporation has debt. Most families have debt. Even the richest countries, the United States, Japan, the EU, drown in debt they can never repay. But here's the strange part. If everyone owes money, who is the creditor? This is the mystery most people never solve. And it begins with the structure of modern money. A structure built on 3 pillars. 1. Fiat currency. 2. Central bank monetary policy. First, compound interest. Individually, they are powerful. Together, they create a machine, a global debt machine, and that grows automatically. But this machine didn't always exist. It was built over time, step by step, crisis after crisis, and every turning point made the world more dependent on debt than before. Let's go to the origins when money stopped being real. For centuries, money was backed by something physical, usually gold. This meant governments could not create unlimited money. They could not borrow endlessly. Debt had limits. But after World War II, a new financial order emerged, the Bretton Woods system. Under this system, the US dollar was backed by gold, and the rest of the world used the US dollar. But there was a problem. Countries demanded dollars faster than the US could supply gold. And in 1971, the breaking point came. President Richard Nixon suspended the convertibility of dollars into gold. This single event transformed the nature of money forever. The rise, when debt became the product. Once the world left the gold standard, something strange happened. Debt stopped being a burden and became an industry. Banks realized they could create money through loans. Governments realized they could borrow endlessly. Corporations realized they could expand using cheap credit. But someone else noticed too: central banks. By adjusting interest rates, they could influence borrowing. Lower rates create more borrowing. Higher rates here's less borrowing. But here's the twist. Every modern economy became addicted to low rates. Higher rates caused recessions. Recessions caused unemployment. Unemployment caused political pressure. So central banks kept lowering and lowering and lowering rates. You can see this in the data. U.S. rates in the 1980s, odd 15%. U.S. rates in the 1990s, 8%. U.S. rates in the 2000s, like 5%. U.S. rates after 2008, near 0%. U.S. rates after 2020, 0% again. And lower rates always lead to the same result. More borrowing, more money, more debt. This was not an accident. It became the backbone of the global economic model. The breaking point, the 2008 reset. 2008 was supposed to be the moment when the debt machine collapsed. Housing markets crashed. Banks imploded. Credit markets froze. The entire system nearly died. This was the perfect opportunity to reduce debt, to reset. Instead, world leaders did the opposite. They rescued banks. They printed trillions. They slashed interest rates to 0. And global debt did not shrink, and it exploded. Because debt had become the solution, not the problem. Governments needed debt to stimulate economies. Businesses needed debt to survive. Consumers needed debt to maintain living standards. Debt was no longer optional, it was structural. The fallout when debt became the engine. After 2008, a new world emerged. Global debt skyrocketed from 140 trillion to over 300 trillion. Why? Because the system now required more borrowing, more money creation, more government spending, more asset inflation. Every fix created new problems. Low interest rates, higher asset prices, people taking more debt to afford homes. More government spending, higher national debt, more money printing, more corporate borrowing, bigger bubbles, bigger bailouts. Debt had become the lifeblood of modern growth. If debt decreased even slightly, the entire economy slowed down. So governments, banks, and central banks pushed it higher, again and again. But then came the next shock. Chapter 5. The Final Acceleration, the 2020 Pandemic. 2020 was the moment everything went hyperspeed. Lockdowns began. Markets collapsed. Companies shut down overnight. To prevent catastrophe, governments printed money on a historic scale. In the United States alone, 25% of all dollars in existence were created in 1 year. Global debt increased by $30 trillion in 12 months, the fastest rise in human history. At this point, the debt machine was unstoppable. The world crossed a line it can never return from, because now, governments can't function without debt. Businesses can't expand without debt. Consumers can't survive without debt. Central banks can't slow debt without causing collapse. Debt isn't an accident. Debt isn't a flaw. Debt is the system. And why debt never shrinks, the real answer. Here's the brutal truth. Debt grows because the system requires it. There are 3 forces that guarantee debt will always rise. 1. Money is created as debt. When banks issue loans, they create new money. When loans are paid back, money disappears. So reducing debt shrinks the money supply, causing recession. No government will allow that. 2. Interest forces the debt to grow faster than the economy. If a country owes $1 trillion with 3% interest, next year it owes $1.03 trillion. Even without new borrowing, the debt increases automatically. 3. Modern economies collapse without borrowing. Growth depends on credit, loans, spending, leverage. If borrowing stops, the economy collapses. So governments encourage more borrowing forever. The pattern repeats over and over. Every major financial event in history follows the same cycle. 1. Crisis. 2. Government borrowing. 3. Central bank printing. 4. Temporary recovery. Even larger debt. We saw it in 1987, 1997, 2000, 2008, 2020, and soon the next one. Each cycle ends with more debt than the one before. Every single time. Final takeaways. 1. Debt is no longer a tool. It is the foundation of modern money. There is no going back to a low-debt world. 2. Every crisis increases dependence on borrowing. The system grows more fragile each decade. The debt machine will continue to expand until something replaces it, either through reform, collapse, or a new financial system. Closing warning and call to action. Global debt is not slowing down. It's accelerating, and as history shows, every time the machine grows too large and something breaks. The only question is, what breaks next? If you want to understand these forces shaping your life, your money, and your future, make sure to like, subscribe, and stay tuned, because the biggest financial story of our lifetime hasn't happened yet.